The federal government has replaced the GST HST credit with the new Canada Groceries and Essentials benefit. The payments are higher, and roughly 500,000 new Canadians who received nothing under the old system may now qualify. But there is already a lot of confusion around how much this benefit actually pays. You may have seen numbers like $679, $950, and in some government announcements, you may have seen numbers close to $1,900. Those numbers can all be real, but they are describing very different situations. What actually lands in your account depends on your family income, your household situation, and whether CRA has the tax return it needs to calculate your payments. The last part matters because this benefit is automatic, but staying eligible for the payments will still depend on filing your taxes. So let's break this down. Hi, I'm Armagan, a CPA in Canada who loves to talk about money, investments, and taxes. If this is something you are interested in, why not subscribe to the channel? So there are basically two groups of Canadians affected by this change. The first group was already receiving the GST HST credit 4 times a year. For them, the benefit did not disappear. The GST HST credit has been renamed to the Canada Groceries and Essentials benefit, and the amount has increased. So if you were already receiving the GST HST credit, you should expect the same basic payment to continue under a different name with a higher maximum benefit. The second group is where this gets more interesting. These are Canadians who previously earned slightly too much to receive the GST HST credit. Because the benefit is now larger, the phase out extends further up the income range. That means roughly 500,000 additional Canadians are expected to receive a payment who previously received nothing. So even if you have never received the GST HST credit before, this change could still affect you. And this is one reason the announcement has been so confusing. The government changed the name, increased the amount, and expanded the number of people receiving it around the same time. So some Canadians are looking at their bank accounts and wondering where their GST HST credit went, while others are hearing about a new grocery benefit and assuming there is a completely separate check coming. There isn't. The Canada Groceries and Essentials benefit is the new version of the GST HST credit. Same basic program, new name, higher payments, and a wider group of Canadians receiving something. I covered the original announcement back in January, and I will link that video in the description if you want the full background. But the name change is actually the easy part. The bigger confusion is how much money you are going to receive, because the numbers being quoted online can look completely different depending on which year and which household the government is talking about. And that is what we need to break down next. So let's see this in an example. Priya is 24. She works part-time at a garden center outside Hamilton and earns about $22,000, which is low enough that she gets the full amount. Back in February, she read that the new grocery benefit pays up to $950. She worked out what that would cover and filed it away as good news. This October, she will check her account and find $169 in there only. Nothing will have gone wrong. That $950 was never a yearly figure for Priya. It's just one example of an household with a single senior he would have received in 1 year, and it includes a top-up that was paid once in June and is not coming back. Take that one-off payment out and you will get the number that repeats itself. $679 a year for a single person, which across 4 quarters is Priya's $169. Not once, every year. For a couple with 2 children, that is $1,358 a year, a little under $340 a quarter. Now the part that we will all love. The old GST credit paid a single person $533 at most. That amount is now $679. That's $146 more a year every year for the next 5 years. And I know what a few of you are thinking, because I would think that too. $679 a year is about $13 a week. And $13 a week doesn't change your life. But 2 answers. It's tax-free, so unlike $13 of wages, you keep all of it. And with a partner and 2 kids, it isn't $13 anymore. It becomes $1,358 a year, coming to your account even if you forget to ask the government for that. Next big thing you should remember is that your benefit is based on your last year's income. Let me give you an example. Daniel and Amara have 2 kids in Brampton. In 2024, their household income was around $52,000. In 2025, Amara picked up a permanent shift and they finished closer to $61,000. Their July payment came in lower than the one before it. And Daniel's first thought was that CRA had made a mistake. It hadn't. CRA just read their 2025 return and updated the benefit based on that from July of 2026. The calculation is based on adjusted family net income, your net income plus your partner's, with a couple of small adjustments. The higher your adjusted family net income climbs, the more the benefit goes down until it hits zero. I want to be careful here because there is no single income cutoff for this benefit. CRA runs it off a table that shifts with a family size. So a couple with 3 kids still qualify at an income where a single person gets nothing. Hold that thought, because what decides whether you get anything at all is next, and it has nothing to do with what you earn. So 3 other things change this number for you other than your income. Marital status, because 2 single people who move in together get counted as one household. How many children under 19 you have and their ages, and turning 19 yourself, which catches a lot of people because the CRA can only start paying you after your birthday if a tax return is on file to pay from. File last year's tax return even if you have earned nothing. The part I don't like about this is the lag. You are paid in 2026 on the version of you that existed in 2025. If you lost a job in March of 2026, the benefit does not notice until the following July, which might not be the time when you actually need this extra money. Income testing itself is alright. The money should go where it is needed, but a system that reacts 16 months late isn't reacting. But all of that math assumes that CRA has something to do the math on. The payment is automatic, but the filing of taxes is not. The CRA isn't watching your life. It's like a computer that reads one document a year, your tax return, and pays out whatever that document says you are owed. Miss the document and the computer just stops sending you money. This benefit gets repriced every July, and every payment from July 2026 through June 2027 runs off your 2025 tax return. Take the same Priya, 2 versions. In the first, she files by April 30th deadline. $169 land on July 3rd, another amount will arrive on October 5th, and then January 2027 and April 2027. And she never thinks about it again. In the second version, same income, same eligibility, but she doesn't file her taxes until November of 2026. So July 3rd came and went, October 5th will do the same. Since she's filing in November, she would not get anything until her tax return is assessed. She would get the same money in the end, but she waited for extra months for cash she was owed in July. So file the return even if you earned almost nothing, even if you owe $0. And if you are a low income earner who hasn't filed in 2 or 3 years, you are the person this whole thing was designed for, and you are the least likely person to be getting it because you have not filed your income taxes. Start with the oldest year and work forward because each year's assessment feeds the next. One other small point worth knowing: if your quarterly amount comes to be less than $50, the CRA doesn't send 4 payments. It will send the whole year in one, in July. So you would have already received that whole year's amount. There is one more thing I want to cover because there is already a lot of bad information floating around about this benefit. You may see posts saying that a separate $234 grocery rebate is coming on a specific date. That is not what the $234 represent. The $234 is the maximum additional annual amount for each eligible child under 19. Under this benefit. That amount is already part of the Canada Groceries and Essentials benefit. It is not a separate $234 check that everyone can claim. And that brings me to the other point, that you do not need to apply for this benefit separately. There is no special grocery benefit application, no form you need to submit, and no link you need to click to claim your payment. If you qualify, CRA calculates the benefit using the information from your tax return and pays it automatically. So if you ever see a message asking you to click a link and enter personal or banking information to claim your grocery benefit, do not use that link. The 2 places I would use to verify anything about the benefits are canada.ca for the official rules and CRA My Account for information specific to you. And CRA My Account is especially useful because you can see the benefit amount CRA has calculated for your household and your upcoming payments. So now let's put everything from this video together. Start with the maximum annual amount. For a single person, that is $679. For a couple, it is $890. Then add up to $234 for each eligible child under 19 years of age. Those are your maximums. They are not guaranteed payments. Your actual amount can be lower because the benefit gets reduced as your adjusted family net income increases. So if your payment is lower than the maximum, that does not automatically mean CRA made a mistake. And if you are receiving nothing, there can be several reasons. Your income may be too high, CRA may be missing a tax return, or something about your household information may need to be updated. That is why I would not rely on a number from an article or a social media post to figure out what you personally should receive. Log into CRA My Account and look at the amount CRA has actually calculated for you. And if something does look wrong, check that your latest tax return has been assessed and that CRA has your correct marital status, address, information about your children. That will answer most of the questions people have about these payments. As always, this video is just general information and your situation may be different, especially if you had a major change during the year such as marriage, separation, a new child, or a change in residency. If your situation is complicated, speak with an accountant before assuming the amount CRA calculated is correct. And if you want to know what else changed for your money this year, I have a full video covering the major Canadian tax changes for 2026, including the new brackets, limits, and rates. That video is on your screen now.